Welcome to podcast number 12 and another interesting debacle always. It seems like every podcast uh, we're talking about another calamity, and this time it's the wonderful banking issues. So what the last thing I read was that there is no more banks left, and I'm talking about the bigger banks, left in the US that will have anything to do with cryptocurrencies. So what does that look like? Is it going to change? Will it not change until there's some regulation? And then what does everyone do? Even just to house investor deposits. What are you guys hearing worldwide?
Go for it, Glenn.
Okay, so are we talking? Sorry, Larry. The question was, how secure are our banks, and the recent meltdown of the financial sector or the banking sector, the perceived meltdown. Sorry, you actually broke up there. But if that's the answer, I think my intro to if that's your question, my intro to the answer is, again, most impressed on what transpired on Sunday and how quick the Federal Reserve were to act, instilling confidence and comfort. Because at one point over the weekend, it was looking like 2008. Here we go again, we saw regional banking stocks take a massive hit in the early part of this week, only to recover. I mean, it was an absolute trader's dream, especially your day traders on some of these stocks. But what is interesting, just going back to Signature Bank, everyone is very quick to point fingers at crypto and digital assets, but the digital asset side only represented 1/5 of their deposits. So it was good old-fashioned poor banking practices, where suppose reckless lending and so on that led to SVB and Signature Bank's downfall.
Yeah, well, it is interesting. I called a couple of the credit unions and some of the bigger banks to see if they would allow us just to set up the fund account, not for trading, but just so an investor could make a deposit, and explained how everything worked, that we were completely transparent, and we were all US based. And the answer was that at this moment in time, nobody really wanted to touch it. It's almost like, while they are more crypto banks, I guess you think of Silicon Valley, although I don't think they were a crypto based bank. I'm not sure. Clearly, Signature was. And Glenn, you're right. It had crypto as an investment or as a trade or anything really had nothing to do with it. Now, I will tell you that I do think our bank, Signature Bank, had one of the best videos of their employees singing. I don't know if any of you got a chance to see that. Oh, you didn't? Oh, they made a commercial. Did you see it, Graham? Yeah. Right?
Yeah.
Had we seen that video before we elected to go with Signature Bank, we might have chosen a little different one. If you get a chance, Glenn, watch it. It's I guess they call it woke is the joke, and they've got the employees singing. Just you can get into our bank. All you need is a signature. It's not what you would typically think that the banking institutions would be. One of the things that Kevin O'Leary was suggesting is we have, I think, almost 5,000 banks in the United States. And then he said somewhere Canada had like 15, and maybe some of the other big countries had 100. But he was saying, you know what? What do you need all these smaller banks so that you have just an unbelievable amount of institutions that need regulation? You think we're going to go there, and do you think we're going to see a big flight of money from some of the local and regional banks to the bigger ones?
Yeah, so I'll chip in here. So,
Well, I think
I
that's
mean,
already happened.
yeah, for sure. I mean, hardly a dull moment in crypto, So we thought that the start of the year we saw a bit of a rally, and it's the bad news flow was going to kind of work its way out. But obviously we've got the latest one come in. But yeah, I think what started off as a crypto story has obviously now turned into more of a traditional banking story. Like to your point, Larry, I think that's exactly what's happening. Is that they've called it Operation Choke Point 2.0, which is really speaks to the regulatory pressure and kind of barriers that have been put up in from a US perspective around the banking system and around the crypto rails in particular. And I think that's exactly what's going to happen. So in the US, where the banking sector is already concentrated within a small number of players, I think it's only going to accentuate that, where you're going to have a smaller, high concentration of assets in a smaller number of banks. And like the regulatory burden, I mean, I'm not in the banking sector in the US, obviously, but just hearing what some of the guys' comments is that there's just a lot of regulatory pain and the regulatory costs in being compliant with the various things that they need to deal with. So that's never going to encourage smaller banks to be operational. And I think that's ultimately in the long term a higher risk, because I think that the value of decentralization is that you don't have centralized failure points. And when you concentrate the number and decrease the number of banks, then obviously that increases. So, but I'd like to just turn the attention to maybe the macro view, which is absolutely fascinating. So, during this whole debacle, what have we seen crypto do, right? We've seen Bitcoin run and run very hard, and we've seen it run. We've seen gold run really hard. So those are your two biggest, like I would call your anti-fiat assets. So for me, this just screams that the market is saying there's risk in the traditional financial system. What are we going to do about it? And hey, like it's as a Bitcoin proponent, it's just beautiful to see the market basically voting in the activities and saying, hey, Bitcoin is one of the assets that we want to go to if we're seeing shakes and cracks in the current financial system, and then obviously gold is your other one. So the other big question, well, I think there's two big questions. So from here, how much worse is the contagion going to be, right? So does the Fed step in? Is that enough, or are we going to see more banks fall over? Then the story's going to run longer. And then the second thing is, well, as I said, like the Fed. So what is the Fed's reaction? If they're going to come in and do a bunch of QE and decrease interest rates, then I think they keep the music playing a bit longer and all carries on. But if they don't, then I think the financial system could come under some real stress. And it's going to be absolutely fascinating to see what Bitcoin's going to do in that scenario. The early signs are good. It's caught a bid, but fascinated to see what happens from here.
Well, Tim Draper is suggesting this may be the launch of one of the biggest booms in Bitcoin. And he says, I bet, well, he wouldn't bet his life, but he'd bet yours that in the next 18 to 24 months, he believes with all the things that are going to happen, the bank fallouts that are going to be coming, especially if the interest rates get raised again, he thinks you're looking at 250,000 for a Bitcoin. I mean, hell, I'd be happy with a half of that. A third would be a tripling of our performance over the next 18 months to 24 months. What do you think about that? Is he crazy, or might there be something?
Look, we'll certainly take that. I mean, I'd be happy to accept that as a prediction. I wouldn't be as extreme that we're going to see that anytime soon. I think that you would need to see proper, almost hyperinflation in the US dollar if you're going to see that type of figure added to any significant stress. Look, I think unfortunately, if the contagion gets really bad, and we do have like a 2008 scenario, in the short term, I don't see Bitcoin doing very well in that scenario. Why? Because you're going to have forced liquidations, you're going to have margin calls, you're going to have a rush for any asset that can be liquidated, and Bitcoin is one of those. And we've seen that in previous financial crises where even the best assets get sold off because there's this liquidity crunch in the short term. So I don't think that this scenario, if it escalates aggressively, is bullish in the short term for Bitcoin. I mean, I think the ideal scenario is almost like a slow decay, a slow loss of confidence, relatively. Uh, but you never really have these kind of crashes happen slowly. Once they get going, they really accelerate fast. So it's really hard to say in the short term, but long term, this has got to be bullish for Bitcoin. And I think that these type of events remind us of the fragility of the underlying financial system. And the reason that Bitcoin was created was to provide an alternative to the debt-based monetary system that we currently have that is flawed in its function. So you can't cry wolf every time that there's a little wobble. So if you were to call the collapse of the financial system every time there was a mini crisis, obviously you're going to be wrong the vast majority of the time. But this is a reminder that the current system we have is unsustainable and highly fragile. And Bitcoin is obviously the alternative to that.
By the way, when we talk about the CBDC, right, the central bank digital currency, and then we talked about turning different countries' fiat currency into digital currency, right? The traditional fiat currency sits with really ownership of the bank, but we get to look at it in our name and do what we want with it, with the understanding that it's probably lent out 10 times over, but as long as all of us don't need all of our money at one time, it's kind of like musical chairs, and the music never stops, so nobody needs to sit out and lose money, right? Mm-hmm. If everything went to a digital currency and you were able to put your fiat digital currency in a cold storage wallet, which means it would be off balance sheet of the bank, would that mean then that the bank really can't lend out any of those dollars at all because they're sitting in our own personal wallet? Is that a possible solution or no?
That would be a solution. It would be money that doesn't have any counterparty or liability attached to it. I mean, that's what Bitcoin is, and that's what gold is. If you own a gold coin or you own a Bitcoin in a hardware wallet, there's no liability attached to that. The reality is that for all our fiat money right now, for every dollar there is in existence, there's a unit of value of a bond or US Treasury, if we're talking about dollars, and that accumulates interest. So you tell me, where does the interest come to pay for that liability? Answer that it doesn't exist. So that's why you've got this game of musical chairs where you've got your debt pile that's ever growing greater and greater compound interest over the last 40 years since the beginning of our modern monetary system, and you've got a finite amount of actual assets in a financial system in the form of dollars. So that's the equation that's never going to balance up, and that's why it's a house of cards that ultimately will fall over at some point in time. But that's the alternative. And just to your question, with CBDCs, my expectation is that it will ultimately be 2.0 of Fiat 2.0. And the central banks are not going to give up the control of assets in a debt-based monetary system. So,
but if you took a Bank of America and you said to them, listen, everyone's checking account, whatever they have, we're going to move it into a digital currency, and then we're moving it off of your balance sheet, and we're going to put it in everyone's cold wallet, which they'll have full control of. They can place it back on to their bank account if they want to move it around, or they can just move it from their wallet to wherever they want. What would that actually do? All these banks would not have, well, they certainly wouldn't have the value or the size, right? And they'd have no money to lend, I guess, in a way, right? So would there be no such thing as mortgages and business loans? Would they all go away? Is that how that would work?
I don't think we've got the insight yet into how CBDCs are going to function on that level. My expectation, look, what I'm a proponent of is sound money, right? So whether you have a dollar that's backed by gold or you've got Bitcoin in its actual form now, like for me, those are both forms of sound money. Well, central bankers have over the years never offered us, been proponents of offering sound money. Why they would do that in the form of the new CBDC now, I don't think there's any incentive for them to do that. So I don't have insights into exactly how they plan on rolling out the CBDC and if it's going to be attached to debt or if it's going to be what I would call sound money. But if history is something to go on, I think it's unlikely that that's going to be the case.
Do either of you know? I guess I'm scratching my head a little bit. I think was it First Republic or SVP, Silicon Valley? A couple of the CEOs uh, immediately before this whole thing went down, I guess days, they began selling stocks and taking bonuses, right? And I'm sure it's perfectly legal, right? I mean, you'd almost be out of your mind to walk into a bank, so to speak, smile at the camera and then rob it, right? And figure it should be okay. So, is there some law or rules that say, hey, it's okay. You can do that. That's not a problem. I don't know what it is. Are the rules similar in South Africa and Mauritius like they are here? You can pretty much do that and off you go.
Graham?
So
Graham, the last time you stole money, how did it work?
I'll skip that question, Harry. I'll answer the first one rather.
Right.
I'm no expert when it comes to the laws and around insider trading, but I would suspect that that's where the legal framework would sit for that type of activity. I mean, it certainly doesn't seem ethical. Whether it's legal, I'm not the expert to comment on that. I mean, one of the things that often comes up in the Federal Reserve meetings with Jerome Powell is almost insider trading by the guys that sit on the Federal Reserve Committee. And then obviously you've got speculation around some of the politicians who may get first-hand information before the rest of the market does about what the interest rate decisions are going to be. So there's plenty of speculation going around in that respect. My understanding is that there is a legal framework around it. Whether or not, on top of that, if it's how easy it is to implement. I mean, I haven't heard of anyone go to jail that's significant for that type of activity. So clearly, if there's something that's there to prevent it, it hasn't been very effective.
Are we, based on what just occurred, is our investment strategy, plans, goals, objectives, has anything really changed, or we're just slow and steady? We know where we're going. We expect the unexpected, I guess you would say, and we prepare for the as best we can for the safety and security of the money from the time it starts. An investor sends the money in to how it's held, where it's placed, how it's invested and allocated, all the way back through. Anything changed on our part, or is there anything that is going to possibly change as we keep learning to add even more safety and security?
Well, I'll jump in there if I may, Graham. So, Larry, what has been quite startling is, ironically, how the digital asset cryptocurrencies have almost been vindicated this week. I mean, as we sit here, Bitcoin's up another 8% today. We're hitting new recent highs in a week of, what, as we already discussed, has been massive uncertainty, concern in the banking system, which is supposedly your safe place to be. And lo and behold, digital assets, and more specifically, cryptocurrencies and the majors are running. So to your point and to your question, it just shows how beautifully placed our products are, in particular, our Spectrum product.
Yeah, absolutely. I'll add to that. So you just asked what, from a investment management perspective, how things changed, if at all. So the only one thing that obviously we are monitoring is the counterparty risk of the crypto banks. So Signature Bank was or is one of our counterparties, but we've de-risked completely from Signature, and we de-risked in advance. So I mean, that's something that we obviously have to keep an eye on. Then there was the Circle issue with USDC, given where their collateral is held. We have de-risked largely from that risk as well. Even though the peg has been restored and the Fed has said they're going to backstop depositors' funds, etc., we're still taking a proactive approach, which I think is sound to de-risk from that specific situation. And then from a portfolio management perspective, nothing's changed. We've stuck to the plan. The market ran very hard from the start of January, which took us and our investment committee, as well as I think the large part of the market, by surprise. We weren't heavily allocated to that initial move. So what we want to do then is look for a pullback to then increase our allocation. Once that rally had taken place, market went to 25, was rejected. We identified 20,000 as an ideal entry level. We got some really nice level orders at the $20,000 level. In spite of all the bad news and the depegs and everything that went around. So we really blocked that noise out and said, hey, it's reached our level. This is where we buy. So, we increased our exposure quite nicely at that point in time. And obviously since then, it's now rallied from the 20,000 level through to 25 and beyond. So very pleased that things have worked out from that perspective.
That's good. So that piece that we jumped in, we're up about 20 some odd percent from our 20,000, not the fund itself. I'm just saying the purchase of that period.
On that recent allocation.
I mean, Bitcoin is now just shy of 27,000.
Jeez.
Yeah. And what's fascinating is Bitcoin is the leader here. It's not Ethereum, and it's not the alts. So this tells you that there's a flight to your digital gold. So this is the store of value narrative that we're seeing is the overarching driver behind this rally, rather than a utility-focused event. And that's not to say that's not going to change, right? That's just what we're seeing right now.
Right.
But for all the Ethereum maxis out there, Bitcoin still is showing that it's got some power in it yet, which is interesting to see.
As this is almost like the Kentucky Derby, but like every 20 seconds, there's another digital currency that's moving ahead and one's falling behind, and every 20 seconds you get another prediction. Oh, here it is. It's it truly is. It's a great ride, isn't it? I mean, if you like roller coasters, I mean, without a seatbelt, this really turbocharges it. Just put a few bucks in 5 cryptocurrencies and watch it every day, and you'll be able to stand up in a roller coaster. Crazy. Well, guys, is there anything else we want to say right this minute about the banking and and what's going on, other than go Bitcoin go? And between now and next week's podcast 13, who knows what'll happen, right?
Well, that's the beauty of our game. I mean, we used to say, 1 week is a long time in finance. Well, 1 day is a long time in the digital asset space in particular. But I'll say it again, just to end from my side. I'm surprised at the level of vindication, ironically, that the crypto space has had this week. When, by all accounts, it was the naughty child that supposedly started this upheaval over the weekend. But yet, as we've looked back over 7 days, Bitcoin standing very, very proud.
Yeah. Well, also the exciting thing about this is you can actually go to bed knowing one thing and not sleep all night long, because you have no idea when you wake up, right? Where is it going to be? Up or down? What is the next breaking news? So it's all good. It's all good. All right, guys. Well, listen, this was great. Everyone's going to have a great weekend, and we'll speak to you all soon.
Super. Thanks, Larry.
Excellent.
Thanks, Greg.
Thanks, Larry.